Well, it's another volatile session on Wall Street and Bay Street, with markets opening lower and moving recently into positive territory. Let's speak to an expert on these markets. He is James Demmert, Chief Investment Officer at Main Street Research, and he joins us now. James, thanks a lot for joining us. You have said in some recent commentary, we're getting close to a bottom. What gives you that conviction?
Hey, Paul, nice to see you again. And yeah, we do think we're getting close to a bottom. You know, we sort of came down into a normal correction when this all started. And then once we surpassed that, that's when things got ugly. In our case, we reduced stock with stop losses. And I think a lot of investors now are probably wondering, what do we do here? Do we sell? How much lower can it go? And our view is, to answer that question, stocks are sort of close to that bottom on a technical basis and on a valuation basis. What I mean on a technical basis is we sort of hit, so if you're a chart lover, which some of our work is, we hit some lines, trend lines like the one that goes back to 2020 that's very market supportive. That's usually where markets and institutions will come back in. We've also reached on a technical basis a high level of bearishness amongst investors. That's usually what causes a bottom to start to form. And then lastly, valuations of stocks, as you probably are aware, have gotten compressed a lot. The average stock is trading at about 15, sometimes less than that, times earnings. That's sort of where you start to see a bottom in markets that is not recessionary. Now, our view is that we're not going towards a recession, but we can talk about that.
Yeah, that was my next question. I also see in your commentary, you think a recession is highly unlikely. That's not the view of markets more generally these days, and many of your peers, many portfolio managers. Why are you confident that a recession, and what geography are we talking about here? The U.S.? You think a recession, I'm assuming in the U.S., is highly unlikely?
We do think it's unlikely. We think it's unlikely on a global basis. And the reason for that is twofold. One is tariffs as they stand are going to take a big axe to growth here in the U.S. and across borders. But now that we're growing at 2.5% growth, we think it's going to cut off half of that growth. So we're going to get close to stall speed, but in our view, not recession. And I think that's where the market likely stops here. Now, of course, if we fall into recession, markets could go lower. Our view is this is about where it stops. And one of the things I think that's important, specifically maybe today, is at some point, if markets continue to act like they have for 2 weeks, something's going to break. And that's going to cause policymakers to have to make a change.
Talk to us more about that scenario. That is the scenario that many investors around the world are praying for.
Yeah, sometimes that is the quick fix, and it reminds me of 1998. Markets fall to a certain degree, and you start to see, for instance, spreads widen in the fixed income market. We're seeing a little bit of that yesterday. And what happens, you start to see, okay, one company or two companies goes under. Maybe it's a publicly traded company, maybe it's a private equity company, because a lot of these companies are leveraged. When that starts to happen, you really start to get the unraveling of markets on the downside. That's when you usually will see the Fed will step in. I know they've said they won't, they don't want to. I think that they will. And that's usually where the bottom is formed in markets. The other side of it is if the Fed doesn't intervene with the balance sheet or cutting rates, you're going to see it's like uncle, the twisting of the arm of the Trump administration. They were going to have to make some sort of negotiating. In '98, we saw that the swift decline just like this, about 20%, kind of like this, and then gosh. Through the summer and the end of the year, we were higher at the end of the year. And I do think if you take the tariffs and you mitigate them and the Fed lowers rates, markets will certainly recover and probably quite swiftly. So again, that's a little tricky for investors. So you don't want to be zero stock here. And if you're not invested, this is a great window for certain sectors and companies.
That's James Demmert. He will stick with us for another conversation. This time we'll zero in on several stocks he likes.